So, welcome everybody. This is Dawn Rickabaugh with Note Queen, where property meets paper and learns how to dance. I'm so happy to have you here at Property Paper Live. This is one of my favorite things of all time that I do with people, and just getting to connect with you and find out what's going on in your world. Just a few things. Axel's with us. I think he looks like a picture of me, but Axel, there you are. Welcome back. It's such a pleasure to have you. I'm sure everyone will appreciate that you're back as well. So I can just focus on what I do and you can take care of the rest. And so I think what we decided is that when you have a question or questions, please chat them or raise your hand, but just up front, just letting you know that we're going to do questions, mainly the last 10 to 15 minutes of this call. So just be patient if you can on that. If you have a comment on the deal review that I'm doing with Mark or anybody else, please raise your hand. I know, Shri, that you frequently comment, and I want you to be able to comment, but just for the quality of the audio, we're just having everybody muted. So, but Axel will be watching for any raised hands, and I definitely do want contributions and thoughts from other people. I just want to let you know, if you're listening on iTunes, on a podcast, please come over to my website, notequeen.com, and sign up there. Or if you're looking on YouTube, same thing. Any links and resources that we share on this call will be hosted on my website, notequeen.com, under a new blog posting. So the things that you might hear us, if you're driving in the car, you might hear us say, she goes, what was that link again? Don't worry, you can find everything that we're going to discuss and share, like I said, within a few days over on a new blog post at notequeen.com, which is going over a big overhaul, and it seems like we're on track for being done by the end of the month. And hopefully the membership and coaching program can be hosted there not too long after that. That's my hope. But for now, it's over on Patreon, and it's a small group starting out. It's really super fun. And that's where Mark and I got more connected. And then we had a deep dive chat just not too long ago. So I think this is a great time to bring Mark on. So,
Got it.
Mark, hey, how's it going?
Oh, good. Doing good.
It's just always so fun. Like, I had forgotten initially, but Mark, we initially got acquainted through Sherry Hill because she's the Kiyosaki guy, and she lives here in Reno and was a part of my live summits that I did 3 years in a row up at South Lake Tahoe. But you and I talked on the phone, and I wonder if we could just recreate that little bit of conversation, because I was so inspired by what you did and the story of the Bitcoin thing, because that's the only new thing idea that I gave you back then. I can't remember. Can you tell me why you were calling me? I can't remember the context exactly.
Yeah, well, Sherry, Mary and I were out in Jackson kind of vacationing and talking about business and things like that. And
Uh-huh.
so I had a question about something. I can't remember the specific question, but I called Sherry from the cell phone. And in the conversation, your name came up as someone who could possibly help me with the solution. So, um, and just consequently, you were going to be doing a property and paper up in Tahoe.
Summit. Yeah, yeah, yeah.
Yeah. And so I wasn't going to be able to make it. And so I set up a call with you and then spoke with you. And then you had referred me to
That's right.
hard money people. And so, yeah. And so that's how we got connected. And then I'm back on some of these ideas now and trying to figure out how it's going to fit in with what I'm doing now. So,
Right. And yeah, I remember it was you were wanting to get involved with more note investing. And I said, well, geez, you're right there. Is it South Carolina, right? South
yeah,
Carolina.
right.
Wendy Sweet over there is right there doing a lot of, good business. And so I'm glad that you got hooked up with them and they were giving you some solid returns. And And then I think you said, was that anyway, I just said, well, you could buy a Bitcoin or something like
Yeah,
that. It must have been
yeah.
back in 2018 or 2019, something like that.
I still remember the price back then. It was like 25,000, and then we got excited and we started getting involved, and then the fortunately or unfortunately, we bought at the peak, but then we continued to stay involved, and we're doing some mining with a couple of different companies. We actually had some stuff going on here at the house, which we moved to an offsite location, and so we've been, continuing to invest in the crypto world, and
Right.
so that's been going good. Things are going back up again.
Right. And what I think was awesome, you just didn't go, oh, let me go buy one or two or something. You actually got into mining it. And you said in the glory days of it, you were mining one Bitcoin a month. Now
Yeah,
that's
for a short time. Yeah,
yeah, that sets you up for success. But also, Mark, I just want to share with everyone, and I'm sure it's just part of your overall investment thesis. It's not the only thing you're doing, but it's just a way that you're diversifying and playing differently. Would you say that you have your risk management and you don't count on having that money? You don't want to have to, when you need money, you don't want to have to hope that the market's up. Although the particularly for Bitcoin, it's maturing and the charts are steadying out a bit after it's been almost 14 years now of
yeah,
chart history or something like that. But people, I know this is about notes, but really my core value is one thing I love about notes and doing deals, real estate deals, one mom and pop to another, is so that we can unplug from Washington and Wall Street. And I know if you've listened to any of my presentations from the past, I show Wall Street like a big giant tapeworm, and I always say the vampires of Washington and Wall Street. So basically, the core value is for us to have ways to unplug from the matrix, so to speak, to have options, so that we're not just at the whims and the mercy of the stock market or whatever. The banks, what are they lending? What won't they lend? So to me, this is just one piece of it. And I just thought that was fantastic, because I don't know anyone that just heard about it and then right away just go, well, how do we do this real big? And started mining it. So that's pretty great. And so just while we're on it, and Axel, can you share the links that are, if you just want to just dabble in it. My kids, they said, Mom, should we be saving money for this and that? And I go, yes. And probably at your level, you should be reinvesting in your small businesses. Each one of them has their own little business, and you should be just go buy $100 worth of gold coins every month. And if you can, 50 or $100 into Bitcoin, ETH, or XRP, and just little bit, because that has the ability to put little bits of money into a lot bigger bits of money. And, in a way that could, in a year from now, it could be life-changing for some people. So anyway, that's my spiel on that. So do you have any comments based on that? Anything you want to say to people and your viewpoint of, why you're in it? And it's not so common for us boomer types to be able to get our heads around this digital stuff.
yeah. Well, the reason that I got excited about it is, because we missed. I worked in corporate America for a while. We've had our own business for over 20 years, and we missed some major. They talk about the S curve. We've missed some major investments. We didn't buy Amazon. We didn't buy Microsoft at the beginning. But a lot of those things looked about the same, like Bitcoin. I still remember driving to work and then listening to public radio, and they're just slamming Bezos. Oh, he's in the red. It's never going to work, and just on and on and on about that. And some of those people that got in early, they were really fortunate. I think that the monetary system, or however you want to call it, with the Bitcoin and everything, I think we're at the beginning of that. And I got excited thinking, okay, this is a chance for us to get involved in a major technological revolution similar to one of those early stocks, you know.
Yeah, absolutely. I love that. Yeah, they've, and it's so typical that, the talking heads, the big money is having the talking heads dog the things that they're secretly investing in. They dog precious metals and just, but with the other hand, they're buying up tons of gold, adding to their gold reserves. They're buying Bitcoin, they're positioning.
Yep.
So you just almost have to go, what are they saying and why are they saying it? And maybe it's the opposite. And there's a link that that I'm going to have Axel share on a video that I think is worthy of watching. The Adam Taggart guy that used to be with Wealthion is starting his own channel now. It's called Thoughtful Money, I think. And I think everyone should subscribe to that. I think he's doing some fantastic work and how he, brings voices together. I think it's worth the time to watch that. I mean, there's so many good things. It's hard to pick sometimes, but a lot of smart money, for instance, Buffett has got a lot of cash on the sidelines. And also there's tons of there's Bitcoin ETF applications up the wazoo. Just this last week, 312 million came into Bitcoin, 350 million overall into crypto space. And so I really do think that we're still such at the early stage. By the time there's mass adoption, by the time there's not just billions, but trillions coming in, because these large money managers can now legally, once they get approved, SEC approval and all that, then just billions and trillions will come in and still be a relatively small part of the overall market, but that'll be life-changing for us that have taken a position. Now, we haven't gone crazy, taken a reasonable position and just hang on for the long term and don't get scared. The typical mindset is to get excited after it's way up. So this is just typical. Okay, right now it's up this morning. It's over 38, almost 39 this morning when I woke up. But people will start getting excited now, but maybe they'll get more excited when it's 50. And then if it has a pullback, and then they'll sell it at 30, but they won't buy it when it's low and it's boring. But they'll buy it when it's high. They'll FOMO in. They'll have weekends, and then they'll sell out when it's low. So you got to just take a reasonable position with regard to your own risk and reward profile and just sit tight. And also, you had given me, you follow Michael Saylor, and I love that Swan site. I hadn't used it. Axel, can you share that with everyone? The Swan site, the Coinbase, Trust Wallet. Trust Wallet is so easy. You can just download it right onto your phone, and it's not as safe. I wouldn't keep a ton of money on my iPhone app, but Trust Wallet is a great. I'm just trying to figure out what's the easiest way for you to just dip your toe in. Go open a Coinbase on Coinbase.com. Go open an account, download Trust Wallet, and just take a few little positions that are sensible. But of course, I am not giving financial advice. But I am concerned about people. Go ahead, Mark.
Yes, I heard just the other day, I figured something out, or I heard someone help me figure something out. It was that, Exodus is I guess is a software wallet.
Mm-hmm.
And so we were trying to figure out, okay, off ramp, on ramp. But if you have an Exodus wallet, it doesn't require any KYC, right?
Yeah.
And so
Mm-hmm.
someone suggested that if you had your Bitcoin on Exodus, you could swap things on Exodus, but your name's not anywhere. So you could have BTC on Exodus. You could swap it for a stable coin. You could send the stable coin over to Coinbase, and then you could have it wired back
Exactly.
to your account.
Yeah,
If you need $500 or something.
Yeah, there's and that's fantastic. That's a great wallet. MetaMask is one. I don't like it so much anymore, but Trust Wallet, you can swap and do that kind of thing too. I like the decentralized thing, but I don't want to get too far in the weeds, but I just want people to hear enough that, and you're a great example. You've been in corporate America, you run a small business, you're doing very well, you have real estate notes, all sorts of things, but you've got your eyeballs, you got yourself on this one. And I just think it's an important thing besides just a little bit of precious metals in your possession. And I just one other thing, and I'll get off my soapbox maybe. But if you want to double your money, just go buy a month's worth of food and wait a year. And then the things that you just bought will be worth twice. So I'm just, those sorts of things that help you be economically resilient, I think we'd be remiss if we only talk about this one part. Well, I love it, the note thing. Mark, set the stage for the couple of scenarios and which one you want to start on first. So I'm going to turn it back over to you.
Okay, well, first of all, I don't have very much experience in notes at all. That's why I'm here. And so what I'm doing is I'm just listening and I'm learning. And I told you last time we talked is it's a brain stretcher for me because there's so many different creative ways to use the private money for either purchasing something, selling something. You had mentioned that there's a lot of private money out there. So after speaking with you, I'd been looking at a house, and we haven't talked to the sellers yet. But I laid out this on and sent you the copy of what I'd written down on this paper, right, and said, okay, could it work like this? Because my son's been looking for a house, in the bigger city near me here, and I'm trying to figure out how to help them. So I've got a lot of ideas on what could happen in the next few years, whether it be me selling properties to people who are occupying them, or me buying a piece of real estate in a creative way. And I'm even thinking this is just this may be off on a tangent, but since we have a small business and inflation is really starting to put a lot of pressure on people, if is there a way that we could finance for people with a note? In other words, let's say they're trying to buy a large ticket item for the house. You're doing work for them, or you're selling them an air conditioner or something like that. Could you write up a note, and then they would pay you by the month, and you'd have a lien on the property? I mean, this is just another idea. I Absolutely. think we're coming down to that. We're coming down to that because people aren't going to live without certain things if they have a home. You see on TV reverse mortgage, but maybe there's a possibility in some creative way for us to do this on a small scale, $10,000-$15,000.
Yeah. So basically, someone needs a new heating, air conditioning, but they don't have the money for it. And you're saying, how can I make this work for our business, right? And help them buy our services. They need it, right? It's not an optional item. Yeah, definitely. You can do that. I would. If I was originating anything that was being secured by someone's primary residence, I would make sure it's underwritten and run through a broker, a licensed mortgage broker who knows how to keep you out of trouble, any sort of regulatory trouble. So that's the way I would do it is reach out to maybe Carolina Hard Money, maybe Wendy Sweet and Bill over there. They can help you figure that out since you already have a relationship with them. But yes, and that's a good point. One of the things in the interview that I recommended with Ted Oakley was he was saying too that everyone is sort of seduced by like nothing bad's happened yet. We sure thought it would, but when you look at it, personal savings are way down, credit card debt is up, and people are taking out equity lines of credit just to survive, and they're paying 8 and 9% for it. And so there's a trend where at some point this is going to run out of juice. There's only so much you can put on your credit card. There's only so much equity you have to pull and what you can afford. So things can get really interesting, even without any big black swan event type things, which are always possible. It just seems like the warmongers and the fear they deal in fear. They got to keep us all worked up all the time. And one of the greatest things to combat the anxiety of watching how crazy things are is just to be in creation mode. Like, have something that you're creating instead of you're just reacting to all the stuff you're seeing and hearing. And you got to unplug and just, what do you want to create in your life? And so that helped me tremendously, because I'm like, oh my gosh, this is just, and it's just the volume and the frequency of crazy things that just make you just like, what is going on? And you're losing track of yourself, and you're getting ungrounded. You just got to unplug and create something, be in service, be in creation. And that's really a powerful way to do it. And instead of waiting what's going to happen, I am defensive, aren't you? We're all defensive about how can we hedge our bets regardless of what crazy thing goes on. But also, what do I want to see, and put most of my energy into that. And then just daily practices that are super simple: eat well, get enough sleep, do my exercises, do my meditations, things like that. Anyhow, let's talk about, and I wonder which one this is. Let me share my screen. Mark, set the stage for the couple of scenarios and which one you want to start on first.
Well, there was two of them. The first one was a purchase, and then the other scenario was just I've been thinking, we have a piece of property and we wanted to build a house. It happens to be on a lake. It has an Airbnb potential.
That sounds, when I read over that, I thought, wow, that's fun.
So then how do you get private money? How do you use private money to do something like that?
That's a good question, Mark, because a lot of when I'm talking about getting money for real estate, it's in the context of a transaction. You're either buying or selling. So basically, looking at, maybe the other one's better to start with, but if you already own it, then just borrowing money, I don't know, can your business lend it to you? Can your 401k lend you some money?
Well, this is basically a construction process,
Mm-hmm.
and that's I mean, yeah, those are all possibilities. Short term, I mean, once you have something built, everybody's more likely to lend you money on something that's completed, and
Right.
everybody's hesitant to lend you money on something that's going to be in the process, because they're like, do you have the ability to do it? Did you estimate the project cost correctly? So there's all
Right.
kinds of ways things can go wrong with that. That's why the bank is so hesitant about this kind of stuff.
Right. Well, from working, being on the lender side with Carolina Hard Money, which I would highly recommend anyone who's, especially if you're on the East Coast and local, they're a very reputable hard money lender, that they're conservative. And I like their outlook. I like Wendy a lot. But if you wanted to borrow money from her as the borrower, you know how much it's going to be.
Exactly. Yeah.
It's expensive, right?
Expensive. Yeah.
Because you were getting 10% as the lender, so you can bet they're lending at 11 or 12 at least,
Mm-hmm.
right?
Yeah.
So they're not. They were the DeFi, the DeFi summer of 2020. You could go and like put your you have a lot of Bitcoin. You could have put it on Aave or one of those things and borrowed from yourself, right? I don't think those.
Yeah. Well, now that seems less risky now, but
Yeah,
the margin call potential, if you have something that's highly volatile, if you bought it, if you had a lot of money at 60 and then it went down to 15, um, that's
yeah,
going to be a bad situation.
right. But there might be a thing where you can just figure out what your risk scenario is, and knowing that we are probably we could have some down swipes, but the trajectory is all very good in my opinion for the next 12 months. A year from now, I think we'll all be congratulating ourselves. But if you could borrow against your own digital asset like that, that would be ideal. Or if you had like, there's some insurance policies that you can borrow from yourself, right? For
Mm-hmm.
for really cheap. So I think if you're just the one borrowing and you're not gonna do hard money and you're not gonna get a bank loan, or you don't have, a angel investor who says, yeah, I'll lend you all the money you need at 5%. I mean, I have an angel investor in my town, so it's not impossible.
Yeah.
So yeah, but this one, okay, that's not the one I have up right now. That's the other one. But does that cover it? Like, I don't have any, magic
Yeah.
tricks for borrowing money in that way. But if you were going to sell that property, or you're buying, what this whole dance between property and paper is a transactional. The juice is at the transaction point. And so what
Yeah.
I'm really excited, what I want more people to be able to do, and that's why I started the little coaching project too, is like, I want to leverage what I know. I only have so much time myself, and of course I am reaching out to sellers and agents in my area. But if I can get more people knowing how to have these conversations, provide the marketing material, provide the educational videos, so that's that educational hump that we have to get over, and so that we can make owner financing offers and get them. And so let's talk about this one. And before, and I know I promised to talk about arbitrage a little bit. And so arbitrage is more relevant because you want to buy this property.
Yeah.
Right. So it's the seller that would be mostly worrying about arbitrage. Unless you were going to sell it, that's when you're going to create the arbitrage, that you're only paying 5% on your money, and you're going to lend it out to your kid at 6%. So you make a 1% spread. Or if it's not your kid, maybe you charge a little bit more, right? But
Right.
right. So so the concept, do you want to explain it in your words, what arbitrage means to you? Because I think
Well,
that's all.
arbitrage to me means that you're rather than you being the buyer or the seller, you're making a margin on the transaction. Isn't that right?
Yeah, it's whenever you just you're making a spread on somebody else's money or assets or time, right? So let's just say if you were doing a loan to let's just keep it simple. You're already been doing loans with the hard money partners. So let's say there's $100,000 loan, and you have a family member that doesn't want to do it all by themselves, but they want to just follow what you're doing. Well, you'll say, hey, why don't you come in with $90,000? I'll pay you 8%. And then you put in 10,000, and you wrap their 90,000 note with a $100,000 note at 10%. So now you're making 10% on your 10,000, but you're making a 2% spread on your friend's money because they're only making 8. So between the 8 and the 10, that's called arbitrage. You're making a spread. And I would bet that the hard money company is doing that too. They're saying, well, we're lending it out at 11%. We're only paying 10. So that's their 1 point servicing spread. That's arbitrage, right? And so also, if you bought a note and your yield is 12% or 14%, and you sell off a front end partial to someone at only 8%, then you've got a pretty healthy spread there, right? So when you're putting a deal together on the seller side or the lending money to someone, that's where it's super easy to create spread. In fact, I've taken very tiny accounts, retirement accounts of my kids that I help set them up, and my own little fledgling things. And you can make a small account, a little bit of money, go a long way with the concept of arbitrage. So I think someone raised their hand. Let me pause for a second. Axel, is there any?
It was Sarah Rose. She
Yeah,
ready to?
ask her to unmute. See.
Okay, Sarah, go ahead.
Hello, everyone, and thank you, Dawn, so
Hi,
much.
Sarah. It's great to see you or have you on. I don't see you, but
Yeah, it was last minute. You don't want to see me. So,
okay.
well, when you said arbitrage, my arm popped up, but I was multitasking. I was sending a link on Wendy Sweet. She is awesome. So, arbitrage. The first thing that came to mind was some folks that I know that do Airbnb arbitrage, but
Right.
basically, you want to explain that idea? It's what you said, really.
No, go ahead.
Okay, so
Yeah.
in their case, but it definitely depends on the market, and they've got a market. I dabbled in that slightly, and I got homeowners or sellers saying, "Why would I do that? I could just Airbnb it myself." But it works really well for them. So in this case, it's almost like a sublet. So they're renting.
Right.
But that's what the seller or the landlord in this case, whatever the owner gets out of it is they get the stability of having a 2 or 3, even 5 year renter in the contract,
right.
But they allow these folks to rent it out, and they keep it in excellent condition because, as you know, Airbnb goes off those reviews, and so that's an arbitrage situation, right?
Exactly. There. So the owner, they can do it themselves, but it's an awful lot of work. It's an awful lot of work to keep a really successful Airbnb, churn it. So a lot of times they're like, okay, we'll take it. We don't have the regular tenant headaches. There might be some other exposure and things, but yeah, you're very right about that. I appreciate you bringing that up. That's a concept where you're just making a spread. It's anywhere where you're making a spread in any way on top. But for the note business, for purposes of it, just to reiterate, when you have a note and you sell off a front end partial, you can do it. When you're lending money, you can leverage someone else's cheaper money, and that's that leverage and that difference is where it's super easy. There's a lot of, like I said, if you wanted to do arbitrage right now, Mark, you can just start cultivating your private money sources, and it seems like it's a pain to do it. And yes, there's extra steps to dealing with friends, family, and having private investors. But that's where, number one, you're helping people that are just don't feel confident enough to do it themselves, or they don't have the time or the interest to do it, but they want their money working. And where you can take a little bit of your money and a lot bit of their money, and instead of you making 10%, you can make 18 or 20% just by that, on the same note.
Yeah, and that's the reason I drew this little picture, because I'm still trying to understand how this all works. And you used a term like wrap, but I guess you always have a buyer, and then you always have a seller, and then this third person could be called an investor. So you could take the numbers that I have on this piece of paper, and you could do it the way you were talking about. You could say, okay, if you have a $300,000 property and you're going to offer the seller 50% down, so that's enough that you got to come up with 150, but you could get 140 or 130 from a private money, and then you could put your 10 or 20 on top, right? Wrap that. Is that what you're talking about?
Well, it can work, but not at the same time if you're trying to be the buyer. So you have to make the distinction with, like, because it doesn't make sense. You can want to borrow other people's money, right? But that's when you're the buyer and you're the owner, then the point of arbitrage isn't the same as what I'm thinking, because you're just you have a different hat on. Now, if you're not the buyer, if your kid's the buyer or some other third party's the buyer, very much so. You can, someone can bring in the buyer, whoever it is, not you, puts down 50%. And, there's a private loan where I'm not going to deal with regulations, and I'm not thinking about legalities and those sorts of compliance issues that are there. But yeah, you can take a lot of someone else's money and a little bit of your money. And I do this frequently. Here is like my angel investor person puts up a certain amount of money, usually 95% of the money, for a private loan for someone to get into a home. A lot of times it's been owner financing. I don't know, But then I'll take 1,000 to 5,000 out of my little, out of my self-directed Roth 401k, and I'll wrap her note. And, she's at 5.5, and I do 6.5. So then what that does is that supercharges my little 1 or 5,000. But beyond that, what happens is that I'm protecting my angel investor from headaches and legal costs, because if there's a problem, then I'm going to foreclose from my position. I'm going to put out the legal fees. I'm going to keep the property taxes current. I'm going to find forced place insurance. So for the right to wrap that, okay, now then I protect her. So all she wants is something that's as brain dead easy as putting a CD in the bank at 5%.
Now, where's the buyer in this? No, in other words, you have the angel investor, you're the coordinator of it, but you're not the buyer. The investor's not the buyer. The seller's not the buyer. So we have, just like the picture here, you have a seller, an investor, you, and the buyer.
Right.
Okay. So it's just
lots of times I know the people. I know the buyer. I have them. So I'm putting the deal together, or they've been paying me on a note for a long time. And I just want to refinance them and leverage my money elsewhere. That's happened also. But she just loves, doing little bits of deals. Now, it's very easy. You can easily make, 8, 9, and 10% in the private money. I'm just talking about very specific angel investor concepts that do happen. So just increase the interest rates here. But if you're going to be the buyer, now let's talk about how you could do this.
For example, in this case, my son could be the buyer. And so part of the problem when you're helping your kids out with a bank is, because I went through this with one of my older children. The bank wants to know, well, where did you get the money?
And it's got to be seasoned.
All these ridiculous questions.
Yeah.
You can't just give them some money and then they use it for a down payment. The bank doesn't like that for some reason. But if you're doing it in a private way, see, I'm coming in here, and then let's say, my son's involved. Maybe he's going to be the buyer. I'm the helper. I'm looking for an investor, and I'm looking to wrap this whole thing up and make a deal.
Right. So here's the thing. In this situation, who do you think I would look to be the investor first before I look anywhere else? Who's the investor? Who's going to put up the money for this deal? Not down payment. Who's going to finance this deal?
Well, I guess there's two people who are going to finance it. The seller's going to finance it if he's going to hold half the paper.
Bingo. Why not let him? Well, why does he have to hold half the paper? So my thing is just ask him to hold all the paper. So always when I'm buying property, and it doesn't matter if you don't want to buy the property, if you get under the contract, okay, let's just say this is just something and then you decided you didn't want it. But what if you did get a really wonderful owner finance deal under contract? You could assign that contract for a fee, just like cash wholesalers do. Because there's going to be someone that goes, holy cow, that's great. I don't know how to get owners to carry. You got that? You've got a little nugget of gold right there. So it's good for you, for family. But if none of you, then you can make a fee on flipping that all day long, or you can buy it, close on it, and then resell it as long as there's no due on clause, and you can wrap the seller's money. So that's another great strategy where, let's just say you put let's pretend it's 300,000. So let's say you only want to put down, 50,000. Okay. And let's say they agree to that. So then they're carrying 250 at whatever best you can negotiate. Now, for someone to get their price these days, they have to be less than what the bank's offering. So instead of like, oh, when you own or carry, you can get a couple points more. Now's the opposite. If you want your price, right? So you gotta make it affordable for someone. So you just put down 50, you get 5% fully amortized over 30 years. Let's just pretend that's a great deal. And then you decide, nah, I don't want it. So then you put it back on the market, but what you negotiate is that there's no due on sale clause where they agree that if you change title to the property, that they're not going to call the note due. And that's not necessarily that hard to get if people understand, right? And especially if they're going to carry 250,000, that means they don't need or want the cash. Maybe they're going, oh my gosh, I never even thought about this, but now I see it's a better way to protect my investment. Because if I sell this property, if it's not a primary residence, they're going to have capital gains. So they're going to write a big check to the IRS. Then what are they going to do? Stick it in the bank at the best 4 or 5%? Well, what if they can get 4 or 5% without writing the IRS a check? So there's a lot of ways. That's why I create those materials and those videos to try to help, explain why it's a great deal. Sometimes they're like, oh, wow. And then they don't want to be paid off. They'll think, oh, I need all my cash. I can pay you off now. And they're like, no. I don't really want to be paid off. They like that monthly income.
Yeah, right.
It's secured by a property that they know. It's a real thing that they know. And then you say, well, I'm going to sell it for $350 with 70,000 down, and I'll carry it 6.5%. Okay, so then you've got arbitrage. You're paying on 5%.
Gotcha.
And the buyers that you've sold is paying you 7%, right? So now you got a 2-point spread. You got 20,000 up front because you only put down 50, but you got 70, and you're only paying 5%. And then because the underlying loan is going to be to the person you bought the property from, it's going to be going down faster than yours. So at the end, it gets to be bigger and bigger what's left on the table. So you see there's going to be a nice bonus at the end too.
Who's first and second in line for this money?
Well, the seller you bought from is always first.
Okay.
Right?
Yeah.
And so then you're going to wrap, basically it's an all-inclusive wrap mortgage, all-inclusive deed of trust, all-inclusive note, because that's better than making a second, right? It's better to just wrap the whole thing, because then you're getting that spread on their money. That's free money. That's just money out of thin air.
Plus, right? You got a down payment from the new buyer.
You got a bigger down payment than what you put down. So basically now you have no money left in the deal. That's right. Called infinity return. There's the calculator goes nuts. Doesn't even know what to do with it.
That's right.
Right. So that's very, very powerful. And you'll be doing the seller a favor. You'll be doing the buyer a favor, and you can step and repeat, because you don't even have to get all your money out if you don't want, but you could. Or let's just say you bought it cash. Let's say you could get them to, you could do it differently, and not, if they won't do it, but they'll take 280 cash, and because they just want to be done, they got to move, whatever. And now you do the same thing, but you know what? Are you following me?
Well, you said cash, and so I'm thinking, okay, so you have to get this cash from another party.
I'm not talking about that. I'm pretending you have it, because I don't want to. Because I'm trying to explain a different side of it, where if you get the seller to carry, that's bingo, sweet dream money. And then you can also have a first right of refusal, so that if they ever want to sell the note, you are first in line to buy your own note at a discount, which in reality looks like a short refinance, right? So it's beautiful, and it's a blessing to everybody. But let's say they'll take, what if they'd take 250 cash? Would you pass that up? You wouldn't pass that up, right?
No.
So, because then you could just carry, but pretend you had the money, or you, in your business, whatever, you decided to allocate, your business bought it or something like that, right?
Yeah.
Then you sell, and let's say you charge the buyer, whatever, within reason, 7%, something like that, 6, 7, 8%. Then now you got to know how you're going to get arbitrage out of that deal. How are you gonna make a spread? How could we do it?
I don't know.
Yeah. So you could sell off a front end partial. So now you've got your friend who they're scared to do anything, but they trust you. You said, hey, I've got this. So we sold it for 350, 70 down. I've got a $280,000 note that I'm making, 7.5% on. If you want to lend your money at 5.5%, that's better than you can get at a, short CD at the bank right now. And it's secured by this property. You want to bring in a couple 100,000, you want to bring in 150, I'll sell you you can either sell a piece of every payment, or you can sell like the first 5-7 years worth of payments. So that's the arbitrage. So if you don't pay them off, so your payment that you're getting in from the person you sold from is 1,500, but you're only paying your other person who's willing to buy that front end partial from you or co-invest with you. Like you sell them a piece of the note, right? And so now, but they're okay with a 5.5% yield. So now you got a 2-point spread, and you bring in 50, you get most of your money back, and you bring in 1,500, or let's say you bring in 2,000 a month, and you're only paying out 1,600 a month, let's say. So you got almost all your money back out, and you got a $400 a month spread. So that's the way to play arbitrage in that particular. So is that tracking?
Yeah, that's interesting. It's just, like I said, it's a brain stretcher,
Right. No, and that's why I wanted to talk about this, because I think it's a really good thing, because it gets confusing. Like there's so many moving pieces, like which is relevant in this situation and that. But once you do one or two of these or more, once you start doing them, it just starts clicking in place. I remember I was banging my head against this before I quit my nursing job. Like for 5 years, I was hanging around this conversation, and I couldn't get it, and I couldn't get it, and I couldn't get it. And then all of a sudden I go, I get it. I get it. And now it's like, it's so fun because you got a million puzzle pieces that you can move around no matter what situation's in front of you, no matter if you're the buyer, the seller, the lender, the note buyer. There's a way you can monetize it when you understand this dance between property and paper. So I think, thank you so much for being willing to be on the hot seat. And,
yeah, this is a learning process for me too, because like you said, there's just so many different puzzle pieces. And one of the things that a question I would have too is that someone needs to know how to evaluate. I mean, how much is a front end partial worth, or if you sell a note, how much? So this is basically a valuation process that I wouldn't be familiar with.
Yeah, but the ways I was just describing though are your friends and family program, because is Shri on here? I doubt he's going to lend you money at 6%. He's used to making a lot more than that, right? So, but your friends and family who don't have a better alternative. So there's a lot of people that they have a lot of money, and like doctors, plumbers, lawyers, they can have money, but not time to know how to invest it, or you, like your family members, like, oh my gosh, I'm losing money. Like they did really good. They set up their self-directed IRA. But now they're too scared to deploy it, and because everyone doesn't know what to do right now. Even the big money managers, they don't know what to, it's hard to know what's going to happen, but they need to make more than 1%, plus the quarterly fees are eating them alive. They're watching their nest egg go down to nothing. So at the very minimum, they need to cover their custodial fees, right? And so you could come in and say, no problem, I got you. I'll put you in exchange for super safe. Not only is the deal good, because they're only putting in 150 and it's worth 350 or 300 at cash, right? So there's safety there. And yes, I can help with that. But also they know you. So it's relationship capital. It's the character capital. So they're investing in not only the deal, but they're mostly investing in you.
Right.
Okay. So that's that. Go ahead. Is that Shri?
Yeah. Did you just call
Hi.
me? I was working in the background.
Oh, I was just saying that for Mark here to get arbitrage, let's see if he's carrying a 7.5% note. He's got to bring in a family friends and family program to lend, who just wants to play and is happy with 5.5 or 6%. I said, I don't think Shri is going to lend you money at 5.5 or 6%.
Sorry, my cost of capital is much more than that.
Yeah. So that's why I'm saying it seems complicated, but let me put it this way. My daughter just, she's got I have two daughters that are massage therapists, and they're relatively new in their businesses, and they were renting a place, and then they increased the rent, and it was a super tiny little shoebox anyway. And they just said, we're not paying that. And I just said, you guys want to have studio space? And they're looking around. Nothing's good. It's too expensive. It's just terrible. I said, well, do you guys want your studio space rent for free? And one of my daughters has a partner with some money. I said, yeah, we'd like to not pay rent at all. And I said, well, then you have to buy a big building, and then you have to rent out spaces to everybody else, and they'll cover your PITI, and you'll have free rent. So sometimes you have to think bigger so the way it relates is cultivate relationships, be willing to bring in new people. And it's a little bit tedious because they're scared. They might need a lot of hand holding. There's education involved. But once you cultivate your private money partners that are part of your normal world, and they just need to do better than the 1 or 2% they're getting at the bank, and they want to feel safe and secure, that's gold. That's gold, because then you can make infinity return, like we have described in a couple of ways. So thank you. Does that help, Mark?
Yes, no, absolutely. I've got a couple other things. A couple other opportunities I'm thinking about as I'm digesting this.
Yeah, it's super great. I really appreciate it. I think it's fantastic. Shri, are you still unmuted?
Yeah.
What is while you're on, I just want to say, what kind of returns are you typically looking for? You're a seasoned note guy. You used to do a lot of non-performing. I think you said you switched to more performing now. What's the rate that you're typically making on your investments?
Performing notes, it's between 15 to 18.
15 to 18%. Mm-hmm.
Yeah. Well, but I'm okay with the really messy title issues. Last payment date is in 2008. So
right.
a lot kind of messy details, and sometimes they end up in litigation. But I have all my ducks in the row, and I have the whole package ready before I start legal.
Right. So here's someone who, he knows how to play down in the dirt. He knows how to get money. It's gritty. It's ugly. It's got hair on it. He knows how to deal with that. So he's looking at overall 15 to 18%. Sometimes, Shri, I'm going to have you on because I want to pick your brain some more. You have some great depth and experience. But anyway, for passive investors, that it's not ugly and scary. Mark was getting an easy, nice 10%. And so for someone who's has a busy life, you're running a business, you have a family, whatever else, 10% is nice. If you want it to be a job and you want to have to, have all this money you need to keep aside for contingencies like legal fees and all sorts of things, yeah, you can make 15 to 18. But if it's not your life passion, it's not bad to make 8, 9, 10% on just passive, easy, not hairy money. Okay, I want to switch over to the chat right now. Let's see. Thoughtful Money, Adam Taggart. Yes, whole life insurance. Brandon, I'm looking at your comment. After 3 years, it can be a great way. You can borrow from yourself. Anytime you can borrow from yourself, fantastic. Chuck, okay. You put 60,000 down, 295, 140 first to seller, 145 second. Chuck, unmute. Chuck, I want you to talk. I mean, I want to hear you if you're still here.
Hello.
I'm so bossy. Chuck, you get on here right now and you talk.
I'm on here. I agree.
Yeah. So your idea here is talk about it. This was your
Well,
idea for Mark's deal.
I was just reading Mark's notes and it looks like he wants to be involved. So if you offered the balance, the buyer, his son, I guess, was putting 60 down, so you got 295 left. If you offer the seller whatever you can deal with, 140,000 first, then you still got 145 left. You know, Mark could offer the seller a second position note guaranteed by his IRA or some other property or something.
Well, shoot.
And then he could go in later after 3 or 4 payments are made and offer to buy the note at a discount to increase his yield.
That's a great idea. Yeah, see how many ways there is?
Yeah.
Gee whiz. Okay, and another way is the seller says, okay, let's say, Mark, you're trying to get your son to put down this money. And then the seller goes, well, I'm okay with holding this note, but the fact is I need more than 60,000 to XYZ, pay off my loan, buy a new car, buy another property. And you're like, well, how much would you need? Well, if I could get another 70,000. So if I could walk away with 130 at closing, I could get it done. Then Mark, you could come in and buy the note, buy a front end partial from the seller. You just bring 70,000 of your money and give the seller enough to walk away. So your son really kind of owes you, right? And so, and there again, if you wanted to sell it out at a cheaper rate, you could still create that arbitrage, but then you could have an investment at the same time you're helping your son, you're getting the seller more cash at closing. So,
So that's like a two-step process, right? Because the one person buys it with a small amount down, and then the investor, myself, comes in and buys a front end partial, and that's what gets the seller down to his 150.
Right. That gets them in a cash position that they can live with. And it's just like there's 1,000,001 ways to do it. Go ahead, Chuck.
And you know that since you talked about before that probably for cash, the seller would take a pretty hefty discount. So you would tell the seller right up front that, hey, I'll buy the note after 3 or 4 payments at this discount or whatever you want to do. And the seller's already thinking, you know, I would have taken cash and this is the same thing as what I would have got. So I would sell the note. Yes.
Yeah. And then you're just going, well, why don't I just lend my son the money? Well, it's harder to make it work for your son. You want your son to have financing he can afford better than bank financing right now, frankly.
Yeah.
Right. So you want him to have that, but you want to make more than 5 or 6% on your money. So you can just say, you know, if you're happy with 8 or 10, you know, and you can make it on a partial, especially, you can make it look so great for the seller on paper. So if they're motivated and capable and flexible, there's just 101 ways you can put a deal together. So,
thanks. Thank you very much.
Yeah, appreciate that, Chuck. I just love this community. Okay. HB10B2. Fantastic. Great. Thank you, Brandon, for your links. All right, people, I appreciate you so much. So use your powers for good and go out there and create financial solutions, just one mom and pop to another. I will catch you around the queendom, and you guys have happy holidays. Wish you the best.